Nigeria has revised its 2024 budget upwards by 1.5 trillion naira to 27.5 trillion naira. Budget Minister Atiku Bagudu said on Monday after increasing the oil price benchmark and lowering the Naira exchange rate assumption. Bagudu told reporters after a cabinet meeting that the cabinet had revised its oil price assumption by up by $4 per barrel to $77.96 and its assumed currency value down to 750 naira to a dollar compared with 700 naira. Now, the minister had last month said the country planned to spend 26.01 trillion naira for its 2024 budget. And this morning, Gospel Obele, Chief Economist, Streetnomics, joins me to shed more light on this. Gospel, it's nice to have you around.
Thank you for having me. Good morning, Lekan.
You're welcome. Now, yesterday, the Minister of Budget and National Planning announced a revised appropriation bill of 27.50 trillion naira for the 2024 fiscal year, with a 1.5 trillion naira increase from the earlier estimated bill. So what was your initial reaction to that news, knowing fully well that there's always been the talk or the question about where the money would come from to fund the budget?
Yeah, I mean, the questions of where the money will come from is a valid question. But I don't think that should also limit us to the necessary planning that needs to go into, getting Nigeria out of its menace right now. Of course, taking into cognizance that there are big structural issues with the budget already, and we're also expecting there's going to be a lot of priorities on infrastructure development and capital expenditure. But in context to where Nigeria is right now, we need to be able to fund and invest and facilitate, the required growth that we need. And growth requires investments. It requires not necessarily a spendthrift approach, but it requires a lot of investment into critical sectors that can, enable the economy bounce back. Yeah, so that is actually a valid argument. So increasing budget sizes and budget packs are not the conversation. Shouldn't be a cause for worry, being where the country is like. However, yes, there is a valid argument around where would the money come from, and in all sense of immunity, I think that should also tell us that we need to start thinking of that revenue problem differently. Thinking of the revenue problem differently enough to begin to maybe also embrace low-hanging fruits. I mean, the cost of borrowing is going high globally. It's not also very healthy on our revenue as well. And the Minister of Finance has talked about the need to also look inwards, but then again, inwards could mean anything, all right? But in context of this interview, inward could also mean leveraging the low-hanging fruits that would help us facilitate a closer approach to funding our budgets. And it's also something to say, in fact, the UK has almost 65 to 90% share of the GDP, in terms of national budget, so national debt rather. So the national debt argument is an argument going on globally. All right, you would always have a deficit budget. You hardly find a country that has a surplus side budget because you always need to stir growth, especially in the times we live in today. Growth is as important as every other form of investment that needs to get our economies to thrive.
Well, just as you have said, Gospel, many years from before now, Nigeria has actually struggled to meet its revenue target, and the variance keeps getting wider. These increases further widen the deficits, and just as you have said, is what obtains in the majority of the governments and economies of the world. But then we will still need to dwell on the issue of where the funds can be generated from. We've seen the government look into tax. We've seen the president travel to different countries, even also ringing the bell at NASDAQ, going to Germany, going to Saudi Arabia, the UAE, and trying to talk to as many investors as he could talk to. As a matter of fact, a couple of months back, he actually visited Nigerians in diaspora, telling them now that the economy is good, policies are in place, bottlenecks have been removed. You can bring your investments in. He has done a lot of talking. Where will the fund come from? Where will the funds come from if we don't have investors willing to put their money into the Nigerian economy, and we have an economic environment that is not really supporting businesses, that is not making things quite good and conducive for businesses to thrive?
Yes, I agree with you. I mean, what the president is doing right now is to find new options strike new deals, find new routes to market, like we always say in strategy. The conventional route of mobilizing finance for development and all that has been done badly in terms of debt and debt servicing, even capital investments and all that. So the president is now looking for, interesting routes that exist outside the conventional blocks, which is what you find around in terms of trying to facilitate or mobilize relationships with economies that would almost not come to mind when you think of investment, the UAE and all the likes. It's one thing to do all that, and it's also galvanize the energy towards striking those deals, those investment that needs to happen in the Nigerian economy. That's number one. Number two is that we need to begin to look inward. Yeah, the business environment is harsh. There are a lot of things happening in the global space. However, there are already existing low-hanging fruits.
Okay.
So take, for instance, global trade.
Okay, gospel, just bear with me for a while, maybe just for a few seconds, all right? We need to go on a very, very short break. So when we return, you can now continue with what needs to be done in terms of revenue generation. Just stay with us. We'll be back.
Okay.
Yes. Oh, okay. Gospel, can you please say something? I think we are having poor audio quality.
Hi, everyone. Okay, is it better now?
Is it okay now?
Good morning.
My engineers are working on it. Okay, can you make do without your earpiece? Your
my AirPods, yeah?
Yes. Can you make do without them? Okay, I think probably that's the issue. Can somebody help me work? Oh, can you please disconnect? You've not disconnected. Then this talkback is fluctuating. It's going on and off. Okay, so Gospel, can you please say something? We can't hear you. We can't hear you.
You can't hear me at all.
Okay, yes, we can hear you now.
Are you sure it's not from you? Because I can hear you clearly.
Okay, so we can hear you now. It's better now. Even the audio quality is better now without the AirPod.
Without the AirPod, okay.
Yes,
then.
it's fine now.
All right.
You're watching Business Edge on New Central Television. We have been taking a look at Nigeria's increase of its 2024 budget by 1.5 trillion naira, and key indicators for this has to do with the global oil price and the value of the currency, assumptions anyway, and that is why they are thinking, or the Nigerian government is thinking of increasing the budget size to see how revenue can come in and the different plans can be actualized with the funds that will be allocated to this budget. We've been talking to Gospel Obele, who is Chief Economist with Streetnomics. And Gospel, yes, you are talking about the low-hanging fruits, and the areas by which the Nigerian government can generate the funds by which to fund this government. So I'd like to have you conclude on that summation before we look at the different sectors that probably might just be a viable means of raising the revenue bar.
Yes, thank you very much, Lekan. Yes, so I was speaking to low-hanging fruits, and these are opportunities that already exist. We just haven't organized them, right? And it doesn't take anything to organize them. It's just setting up a one-stop shop to ensure that you can easily facilitate, the we can really facilitate an organized receipt. That means, sort of making FX from those opportunities. Like number one is the service sector, which is about 56% of the Nigerian economy. And globally, total digital services traded, exceeded total goods traded by 15% in the last 1 year. All right. So, and that's about 56% block of our GDP right now we're talking about. So the conversation is, how do you organize that sector and then you export those talents to market, relax the barriers around FX and all those, foreign exchange receipts and all that and all. So, I mean, more than ever before, individuals have had more limitations accessing their DOM accounts and all that. So we need to be able to create a strategic flow between the service sector economy and its exportable potential, to markets externally. You also want to think of businesses, local SME businesses, that despite the tough terrain of doing businesses, they are already export ready. And a lot of times it can be just one documentation they need or one access to market solution, meaning how can I get my adire, my tiles, my all of these things moved from Lagos to Paris or Lagos to Kenya, and how do you facilitate that exchange window and all that. So these are opportunities that exist at scale, that we also need to, create the structure to help them scale. And the structure can just be a one-stop shop. It should be easy for SMEs to access the documentations they need, all of these letters of credit and all these things they need to get their products out there. And there has to be a chain where government is tracking, paying attention, and taking a percentage of that FX transaction as it comes back into the local economy. And the angle you want to think of is the foreign diaspora remittances. The truth is, it's not enough to say, oh, Nigerian is safe, the economy, you cannot invest. People know that the Nigerian economy is in a mess. People already know that. So it's not about coming to tell them. You have to make them believe why, regardless of the problem you have on ground, we are working to make the situation better. And we need your diaspora remittances to be channeled towards investable courses in the local economy or productivity-based courses rather than the current consumption/welfare structure we have right now from the diaspora market, right? So it's not enough to go there and tell them what they already know is not true. You have to accept that the problem exists and sell a strategic plan and vision to take off. All right. So, and that's the only way you can begin to build buying from the diaspora remittances market to ensure that those remittances are channeled to the productive stream of the economy. Once you can begin to leverage these three core streams of solutions, you'll be able to see the impact on revenue mobilization. And of course, government has to do its own bit in terms of transparency, accountability, cutting down heavily on government waste. I mean, in the last 2 to 3 weeks, we've heard how much institutions or political figures are spending on food and all those things. Those narratives always disrupt the flow of investment because people can see that it's a wasteful economy, right? So you can't expect to have this and also have all of these investments trooping in. It doesn't work that way. Even if you have the waste, you have to construct the story in such a way that people can believe and commit to your vision. There is waste everywhere in the world, but you have to be able to construct a story that people can commit to that vision and create the solutions to help more SMEs thrive. All right. So once we can begin to have that exchange window, you're securing FX and all that, which is the most sustainable pathway, to secure revenue right now in Nigeria. Because even the local Naira is devalued, number one. Number two, increasing taxes would also impact further down the line on the cost of doing business and the cost of living. So you are regenerating the inflation cycle either ways. All right. So it's kind of unfortunate that the only solution government can think of now is increasing taxes. And that's because the world has been designed to believe that conventional economics only is the way forward.
Okay,
but there are little,
sorry to cut in. When you just mentioned the value of the currency, I decided to say, okay, let's just quickly look at that. But then I want to start with the oil price benchmark. So, of course, that's the assumptive prediction by governments and why it has revised the budget's portfolio upwards. Now, looking at the revised bill, it has actually increased oil price benchmark up by about $4 per barrel, looking at $77.96, and a decrease in the Naira exchange rate assumption. That's about 750 Naira to $1. But then let's quickly look at the oil benchmark. What do you make of the proposed price? A lot of people are considering the feasibility of this particular assumption, considering the uncertainty around what OPEC Plus might put out at its postponed meeting. You know what it is, what obtains now with oil production, both locally and globally, and the cuts and the different meetings and the trajectory of the OPEC Plus. So how feasible is this particular assumption by the government?
Well, the truth is, on one end, I would have kept it at 73 if I had the opportunity to, because it's better to, you don't also want to be over expectant about the events, or don't want to underestimate the events that may shape 2024. So I would have said, okay, it's better we're at 73 and we make a high margin when it comes to the market price at the end of the day, and we're raking in more monies, because that's also a possibility. The fact that what a benchmark means is that you know that this is the least it can fall to, or it will ever be. So even if it goes higher, you're making extra money on that. So you don't necessarily need to increase your benchmark by virtue of the expectation or extra information that you have, right? Because putting it at 77 right now technically means that if anything happens and it comes down to 74 or 75, it's going to affect revenue projections and all of that. All right. So I would also think the planning strategy is a bit, I don't think it's the best way to go. However, the current state of geopolitics in the world right now are strongly influencing oil prices, all right? And it may likely be in favor of oil prices. It may likely be. But on the other flip side of things, you also want to consider the fact that you're not even, if we were refining and selling, you understand, we are literally on the better side of the divide. But right now, we are selling raw materials, and these stuffs are being sold back to us. So if you look at the demand supply economics and all that net profit and all, there are a lot of worries around that sustainability as well to fund the budget. So I would want to think of really, I don't see any fresh thinking around the Nigerian budget. It's still same old. And it's really worrisome, because I do not think this path will bring us out of the situation we're in. I mean, this path led us to where we are in. We need a different approach to bring us out.
Let's now look at the exchange rate, Gospel. At the current NAFEM price, how realistic also would you think in terms of the exchange rate, 750 Naira to a dollar? Assuming the federal government wants to achieve this particular exchange rate Q1 2024, that is next year, do you think that the monetary and the fiscal authorities are well on the path to achieving this? Because, of course, there's the harmonization of the platforms, of the exchange rate platforms, but then we've not really seen any significant change or drop in terms of forex value. So where are we driving at?
So my assumption is that the 750 quoted there is a parallel market price, yeah?
Of course, yes, parallel markets.
Yeah, so that's the assumption. And right now, the parallel market price is at a significant, above 1,000. Now, to move from 1,000 to 750 in a year, you need a strategic leap in investments to organize efforts and, for it to also be reflected in the value of the currency. And those organized efforts have to be productivity based, not just closing supply gaps. Because if you look at the efforts and events that moved us from 500 and something 2 years ago to almost about 800 and something about October that same year, that's about 2021 or 2022, you realize that some major shifts happened pre-elections, the Naira redesign, clamping down on crypto transactions, withdrawing Bureau of Exchange licenses and all that. Those are major economic events that shape the status quo based on how unstructured and how exposed this exchange market is already. All right. So it's not enough to say you want to unify. Unification of the market will not bring down the exchange. No, even with how the markets are currently unstructured, a productive economy will naturally shrink that exchange to a good point. Then you now begin to think of how do you want to create the right incentives to ensure that the two markets are properly aligned. So it's not a question of creating one policy and then giving an instruction for the markets to align. No, there are reasons why the parallel market exists. If you force a unification, what's going to happen is that newer streams of dark parallel markets will come out, meaning people will engage in the parallel market without necessarily say they're engaging in the parallel market. I and you could have have our own exchange on a transaction. We could literally determine what the exchange rate on a transaction will be. All right, we will no longer follow the standard exchange rate, and all of that. And that's what happens when you don't think of an economic policy comprehensively, knowing fully well the volatility and the complex nature of what you have structurally. All right, so we're underestimating the demand for FX. That's a major part of the problem that exists. So because the demand is so high, even when you shrink it, people can still not access FX through the official window. All right, so there needs to be a very intentional solution around it. And one of which will be find a way to incentivize and make the parallel market part of the norm. That is the point one. Not trying to cut them off and say you must join this thing and become a unified market by all means. All right. That story sells when it comes to investor markets and all that, and just trying to boo them and all. But they already know that the reality is you still have two markets. So if the vehicle is not driven on a productive if it's not driven on productivity, meaning facilitating more SMEs in Nigeria to actually export. Because right now to deal with productivity, you have to fix power, fix all this, but at least the ones that are ready, get them to export. The services sector, get them to export their services. Once you can begin to mobilize that energy, it becomes very easy, to invest back into the local economy. And because we're also raking lots of FX, and talent is now sort of the avenue to do that, it may even impact on the Naira. And that's another productivity. So talent productivity, not necessarily only manufacturing productivity, can also lead to an improved positioning of value of the Naira. So that's how I think about it. Get more people to export their services and have a solid chain to take a percentage as FX income and all of that. When you X that based off on scale, then the Naira will begin to shape its value naturally because you are taking off on the grounds of productivity, not on the grounds of trying to close the supply gaps, because you cannot close supply gaps enough to meet the demand.
We can not stop talking about this gospel, even as we look at what needs to be done in these areas. But then even as we look at these areas, we still need to consider the fact that the debt sustainability plan of the government is also a major issue, most especially with the debt portfolio going above 87 trillion naira. So even as much as we're trying to open up the economy, look at different areas whereby we can generate funds, we know that these particular area takes a chunk of the government's revenue, as it were. So how do we now deal with that particular issue, the debt sustainability plan of government that he has talked about so many times, saying that it is not sustainable because we have to pay so much and we still have to fund the government. The cost of governance has gone high, it has skyrocketed because of inflation and every other challenge that the country, that of course the government has to be faced with. So how do you think the government can also deal with that also?
Well, to be honest, the government has to first be honest with itself. I don't think that the honesty is there. Honesty, yeah, is very relative, but first of all, cut down on waste, cut down on waste and see how much can be saved, not just saved, can be plowed back into the economy as investment. Once you start making a significant effort and you're driving necessary storytelling, you begin to get the reputational leverage you need, all right, to negotiate debt more sustainably, to get into deals and other forms of investment with different stakeholders more sustainably. So stakeholders, it's not just about paying the money and how sustainable is this debt. It's also about the efforts you're making to ensure that you're improving the quality of your fiscal engagement or the quality of fiscal governance, and taking those efforts to the deal rooms to say, this is what we are doing, this is what we are doing. In 5 years' time, would have completely turned this around. Those are part of the soft elements that people listen to, and they're willing to reschedule debt payments, re-engage your debt sustainability arguments or plans as the case may be, and all of that. So I think it's more about looking at the softer element, because the harder elements, in a way or the other, are not really sustainable in themselves. Meaning that going out to just make those pronouncements or going out to just increase taxes and all of those things always have a ripple effect on the local economy. And the local economy is constantly degrading every day because we're not still fixing the structural and most important issues, which to a very large extent give us leverage in the long term.
Let's now look at the non-oil sector, because, of course, you talked about the oil sector and what needs to be done in that regard. We're looking at areas around agriculture, ICT. Earlier on, you talked about the resourcefulness of diaspora and remittance, and of course the creative industry. Now, there are other sectors that we may need to look at if we are hoping to drive revenue growth in that regards. Which sectors would you consider? What are the policies do you think would be or should be on ground to propel a revenue mobilization drive of government?
Yeah, I'll think of the services sector and every other sector hinged on that block. Take for instance the creative sector. How are you organizing the market? There are no regulations, there are no laws, there's nothing going on. Yeah, there are regulatory bodies or associations, but people need to be held up to standards. There have to be a constructive way of doing things. There are different streams of the creative sector right now that are largely informal. How are you making them more productive and applying that strongly in the bringing that, onboarding all of that into the revenue stream, as a case. So the numbers are there in the services sector. We don't even have a services sector plan right now. All right. So you need to first have a plan. The plan will entail how you want to train, onboard, provide access to market, sustainable talent development and opportunities, and then how you want to make revenue from the sector. Right. And you have more hotels in Nigeria that you have, tourism spaces, and we have a lot of tourism spaces to even start with. But how are we projecting those as tourist destinations? How are we mobilizing to make revenue from them? How are we telling our stories? So the creative sector alone can even solve Nigeria's problem. All right. So, how many landmarks and eco-hotel facilities do you have for conferences and all that? You don't have so much, right? So we need to really put in the right effort to ensure that we're telling our stories right, and you're also supporting local talents, which is where the money is. In fact, you realize that the money is in Nigeria, the people of Nigeria and the Nigerian people. All right. So how do you promote those talents to ensure that there's a strong revenue drive, as well as you're creating access to market, which is opportunities that they need to scale, and governing that effectively as well, sustainably over time. So I'll think of the services sector and every sector packed within the services sector.
Gospel Obele, Chief Economist, Streetnomics. It was nice having the session with you.
Thank you for having me.
You're welcome. Thank you so much. Now, the revised budget to some economists is a positive sign for the country's growth, that is Nigeria, and of course, some development. They say it shows that the government is committed to investing in the country's future. But others have said that the government will need to map out viable sources for funds. We've tried to establish that on the show this morning, and carefully manage its spending to ensure that it does not lead to economic clogs. And that would be definitely areas that the Nigerian government would have to look into if it hopes to plug leakages and expand its fiscal portfolio. We'll go on a short break. We'll bring you international business stories, and after that, we'll bring you our next conversation. Don't go away.